companies, roughly 1 billion a year is capital attracted throughout Europe, and due to the, I would say, the strong embedment in the regional innovation ecosystem of our members, the companies that are supported by EUBIC survive above average. So of course it will come later as well. We'll see that startups have other needs than CSR, unfortunately. They are struggling for survival, and I think Luca can probably have something to say about that too. It's not easy to start your own company, and the first 3 years, 5 years are critical. More than 50% don't survive after 5 years. So CSR is not yet on the radar yet, and it's coming more and more, and we'll come to that later. This is a quick snapshot of where we operate. As you can see, a lot of them are around coastal areas as well. We had the pleasure of having EuroOcean at our annual Congress last June in Atlampol, one of our members in Nantes, which of course is closely related to the Saint-Nazaire shipping area, also the blue economy and the marine scientists there. So they form the local ecosystem around the blue economy. So we have roughly between 10 and 15 of those members that are really strongly focusing on the blue economy industry. As said, what we do realize and what we see in the innovation landscape is that we need to accelerate the performance of not only European regions, but also stimulate the supply of innovative solutions. So we focus on more and more systemic innovation. Our members form the spider in the web, if I may say so, of many innovation ecosystems in Europe, and they help to constructively build them out. For that, we have a specific EUBIC Innovation Ecosystem Booster framework. We'll share you a QR code where you can look at it if it's interesting for you. These are the tools. It's a playbook that has all the tools that our members use to stimulate their regional innovation ecosystems. As you know, it's a solution is not only born in a university, it's not only born in a research center, it needs to go to the market, it needs finance, it needs clients, it needs a whole village to grow and to become mainstream in that sense and to survive. This is what our members focus on. So far about EBN, I have the honor, or at least I took it upon me, perhaps not so smart, to dive into the regulations that are actually stimulating CSR at the European level. I would like to see how we drive impact together, and that for that I made a division between impact by law and impact by operations. I think you can also say impact by regulations from a European level, or you can see how the market is dominating and how the market is driving more sustainable solutions. So first focus on this web of regulations and actions and policies and directives of the European Union, a European Commission, as mentioned as well. CSRD is one of the big directives, laws that are pushing for more sustainable solutions and helping, hopefully, to get Sustainable Development Goals back on track, with only 50% at the moment on track. I think it's very clear that we're in a poly crisis, and the urgency to act against climate change and rising inequalities has never been more acute. So the Commission has stepped up their action with the EU Green Deal. Mostly you are familiar with the action, or at one point have heard of it. It is the attempt by the Commission to drive transformative change at an European level. So we will see that not only through regulation influencing demand, for example, for green tech or blue economy solutions, but also how they influence supply and demand driven actions. I deliberately left this as a very chaotic overview of a lot of actions and a lengthy list to show you that where within the different regulations and action plans, because there are sub-action plans in the sub-regulations, they're actually a comprehensive approach by the EU. And we'll see that it will also stimulate, in the end, companies that are from our network relevant to startups that are pushed to become more green. And it's not always easy to be green, as we know. I will skip the part of how much money is involved, but roughly 1 trillion euro in sustainable investments seek to be raised over the next decade. And I think without looking at the different programs, how much money is in there, it's a lot. The big takeaway I think you could remember from this is absorption capacity is one of the biggest issues that we see in Europe. We see it in the regions, and we see it as well among companies. So there is a lot of money and there's a lot of regulation to push for the green transition. The capacity at the company and business level versus and regional levels and government levels is perhaps lagging behind. Let's make it a bit more concrete. So how does this law translate to what companies that might want to be involved or seek to get involved into CSR practices and ultimately as well try to improve their ESG performance? How the EU regulation influences that? Taking a step back, where we see that not only government, of course, and law trying to stimulate the green transformations, also businesses to become more competitive, innovative, and sustainable and inclusive. I took the liberty of having a rough distinction between three different categories, and I think we talk a lot about the right category here, and it makes sense as well because it's mostly the scale-ups and the larger mid-caps and the corporates that are affected directly by CSRD, and it's rightfully so as well, because perhaps they're not directly CSR oriented, so they needed to be stimulated by regulation. The middle category, where you look at the startup pillar, you will see that they're not per se CSR oriented. The green tech startups, and that's more, I think, a metaphysical question or more philosophical question. If a green tech startup should be taken into account that by operations, they're already working on CSR performance. So if you're working on a biofuel, for example, do you still need to measure your whole company-wide performance? I'll leave that question here for the audience, or perhaps maybe for later coming back. I won't focus on it. But in any case, the startups are exempt of the CSRD regulation. They're not applicable in terms of needing to report their CSR performance. I think 250 employees is the threshold. Everything below that is exempt for reporting requirements by the CSRD regulation. Just very briefly, we have, of course, the left side of the column as well, which are the impact startups, where impact equals profit. Most of them are exempt of CSRD. So which ones are not, of course, are the larger ones. So talk about Warby Parker, Patagonia, Tom Shoes, Fairphone, etc. The Tony Chocolonely. The larger companies, of course, they need to report CSR performance. They do it already from their philosophy or by nature of their being as a company. EBN and our members, the EU BICs, they focus mostly on the middle column. So the startups, and those are, as you see, for EBN only 36,000 startups a year. Talk about hundreds of thousands of companies throughout Europe, all not affected by CSRD regulation. So they do not invest in CSR at this point. That sounds gloomy. I think that there is some sympathy why. I think resource allocation is one of the biggest points. Implementing ESG reporting and sustainability measures can be resource intensive, may be challenging as well for startups with limited capital and manpower. And it might not be directly the first thing to tackle, mission critical thing to tackle. Yet, of course, any company, startups as well, in whatever early stage or mid stage they need to be compliant to the regulation. That's either on a national or European level. CSRD is not applicable. There are other applications that will push startups in a deeper commitment to ESG reporting. And I think for that we have to take a bit of a sidestep towards what we're discussing directly on the CSRD. There's a lot of money necessary for the green transitions, not only for EU society, but also for EU businesses to accelerate the transition to a more competitive, innovative, and sustainable and inclusive economy. Colleagues from Impact Europe, the former Venture Philanthropy Association, gave a quick overview a few months ago. Roughly 4 trillion is needed in euros on the European level only to annually to deliver the SDGs by 2030. On the other end of this overview, we see as well a bit of a light of hope, I must say so, and something that we're very strong at the European level. There is 1 trillion is the potential size of the impact investing market in Europe by 2034. So we're not there yet, but what we see in Europe, and the market share of sustainable investments represents a substantial portion of the overall investment landscape in Europe. We'll see in a moment why green capital or sustainable investment is critical in the story towards more companies adopting ESG. But first, maybe a light of hope, and I think we're doing quite well as Europe. 16% of the total net assets of funds hosted in Europe are sustainable funds, indicating a strong integration of ESG criteria in the investment strategies. Globally, Europe is performing significantly better than the rest of the world. 83% of the world's sustainable funds and net assets are managed in Europe. To put some numbers on that, it equates to roughly 7 trillion of the 12 trillion euros in total sustainable assets managed globally. So that is a very hopeful. We see as well that in the last first half of 2023, sustainable funds in Europe saw inflows of roughly 57 billion, just in the first half of the year. But as you can see on this the chart here, we need much more money to do the green transition. There's a substantial gap. Darker green is what we have at the moment. You can't see it clearly, the 1.8 to 1.3, and we need in total over 8 trillion on a global scale. So the Commission has put to effectively put into law a stimulants act that looks for greening the investment landscape. So we seek to increase investment in sustainable assets. So a serious push towards more sustainable investment practices, pushing funds to allocate more capital to assets that meet ESG criteria. And this has as well effect. It has contributed to the substantial growth in sustainable funds under management in Europe. So what I want to focus on here, and that's the sidestep that we take from the CSRD, is another acronym. Let me first speak it out loud. It's a Sustainable Finance Disclosure Regulation, SFDR, and as well as affiliated to it, the EU Taxonomy Regulation. I won't focus on the latter, but the first one definitely is affecting the hundreds of thousands of startups in Europe, and as well effectively drawing them in the comprehensive approach to integrating sustainability into Europe's financial and economic systems. What does the SFDR do? It's designed to allow investors to properly assess how sustainability risks are integrated into the investment decision process. It's, I must say, Europe's biggest political objective, contributes to Europe's biggest political objective, and that is attractive private funding to help Europe make the shift towards a net zero economy. Very briefly, so on the SFDR, it mandates that financial market participants, including investment funds, disclose how sustainability risks are integrated in their investment processes. So we talk here specifically about green finance and those that are labeled as light green and dark green in terms of their sustainability performance. The SFDR requires from investment managers to show how their fund is performing in terms of ESG. For that, of course, they need the data from the companies that they're investing in. That is a sidestep. For now, it's only applicable to the light green and dark green sustainability labeled funds. But it's part of a larger strategy of the European Commission to, in the long term, drive a lot of more private investment that can be labeled as green financing. Impact investing is and has become one of the fastest growing areas of investment in the financial industry. And people really want to put their money where their mouth is, and people want money to work for good. And I think if we keep the pace, impact investing can indeed hit 1 trillion by 2034 and grow its mainstream market share from 1 to 10%. Why does this matter for CSR and CSRD and for startups in that sense? You will see now in that additional transversal column that the SFDR is applicable for all companies trying to raise money or having an investment plan. as said, what matters the most for companies is starting companies is surviving, and they're on a very tough journey. Each innovative tech company is, I think, one of their main cases or two main aims are: one, finding clients and finding customers, and the other one is not to run out of funding before you find those clients. Raising capital is critical to power this journey towards building a solution that is worth paying for by customers and solving a real world solution and that real world issue in that sense. So if you look at the startups all over across the board in all the companies, they need to comply with the regulation as well as the SFDR. Specifically, startups seeking investment must now demonstrate strong ESG practices to attract funding from SFDR compliant investors. And as we've seen, that pool of money is getting larger and larger and hopefully mainstream later on as well in the coming decades. This means that even early stage companies need to be prepared to report on their sustainability efforts, aligning with that increased demand for transparency and accountability in the investment community. So if they want it or not, and if they seek to be innovative and jumping on the fast-moving CSR train or not, I think, fortunately, startups, and that's a message that we push to our network as well, starting to help them, enable them to measure their ESG performance. They need to invest in CSR. I think Luca already showed a few benefits. I can only echo those indeed. And we see that startups that can actually demonstrate a strong commitment to sustainability and transparent reporting will have a competitive advantage in attracting capital. It also not only is interesting for attracting capital, we did several pieces of research that show that it's improved risk management benefits. It has enhanced brand reputation, of course, as was shown earlier, and better operational efficiencies, among others. We see share price volatility going down. We see market risk going down, all due to committing to CSR. The other side as well is true as well. From the demand side, so from the client side, we see that 77% of customers are motivated to purchase from companies that are committed to making the world a better place. And 54% as well say that they have actually stopped purchasing from a company due to its public position on an issue. So the vote of the client and the customer, and now the vote of the investor as well, becoming more and more critical towards how innovative solutions will see the daylight or not. To conclude, yes, indeed, rather than being seen as a cost or a burden, an investment in CSR should be seen as a long-term play to increase profits. And ESG criteria, startups seeking investment will need to provide detailed information on their environmental, social, and governance practices. The sooner or the later, the better start early. To put mechanisms in place to measure and report on their sustainability performance. Yes, it can be challenging, and it can, especially for those with limited resources, but what have we seen just from this quick overview? There are definitely reasons to start doing it already, critical reasons, mission critical reasons, as well more purpose-driven reasons and solutions out there, such as those of Seed the Change, that are calling for a movement of startups and they're starting companies to invest in ESG. For sure, not even with CSRD, but with the regulations we saw in investing, it's becoming necessary to secure funding from sustainability-focused investors and share that is growing. If we would like to learn more about what EBN is doing, I invite you to download one of our reports. Of course, contact me via Ruud or Sarah. I'm more than happy to further the discussion now in this warm summer afternoon. Thank you.
Thank you, Bram, for your very engaging presentation. These regional links that EBN works so hard towards, they're very important, I think, for motivating change. And it's clear that EBN is positioned to have a very big impact on the business sector in bringing the topics of sustainability. In a broader sense, it's not simply limited to CSR or even the blue economy, but we need to think, I think, in terms of sustainability as a whole and bringing that to the forefront, particularly for newer companies. And so just before we move on to the participants Q&A, I would like to invite the participants. You may put your questions in the Q&A now and we'll address them later. But I just wanted to say, on behalf of the role of ocean literacy, we call OL for short. The purpose of OL is to equip society as a whole with enough knowledge about the ocean, the water cycle, the environment, to be able to have an informed conversation about how modern day challenges should be or could be addressed. And as such, we as OL, Ocean Literacy Ambassadors, I have a question. It's for Luca and Bram actually. How can we as OL ambassadors entice companies to want to be more sustainable or to care about incorporating sustainability in their corporate culture, even if it's not to the extent of a fully fledged CSR strategy, just beyond simple compliance? How can we facilitate that transition?
Tough question. But okay, from my experience, I don't know if it's totally relevant with your question, but from my experience, I think, I mean, on one side, we have big companies. Today, I would say almost all the big companies, at least in Europe, they know that somehow they need to deal with sustainability. So they may do it because they believe in it, or because it's part of their values, or maybe they will do it just because they have to, but they know. So I think the biggest challenge right now is with small and medium enterprises, that maybe they still don't see that urgency to act according to new regulation. In my experience, there are two drivers, let's say. The first one is about awareness, in the sense that a lot of time, especially small companies, are really on the shoulder of few people that may be a little bit, I don't know, over 50, let's say, and so maybe they are not that informed about the reason why now sustainability is becoming so relevant also in the economic sector. And most of the time, people, when they don't know something, they may feel a little bit judged and they may respond like negatively. So I think it's really important to create like a safe environment in which everybody has the time and space to learn and understand. The second driver, I think, can be a little bit like more economic, and try to make them understand why, first, as also Bram was explaining, it's very important to invest in sustainability strategy to differentiate themselves. But in a few years, if also small companies will not invest in sustainability strategy, probably they will risk to be kicked out of the market. And so right now it's an opportunity. In a few years, it will become an obligation, I would say. And it's really important they see, like the situation the way it is.
Thanks, Luca. Bram, do you have any feelings on that?
Yeah, for sure. I think you're up to quite a challenge, and you realize it probably yourself as well in the daily work. Although a large share of society, is my estimation, is aware of the sometimes poor and drastic situation of our ocean health. There are a lot more question marks about how we could actually support creating to healing the disease in the oceans and everything related to it. So what I see, and what I meant as well from Luca, and what I definitely endorses is the awareness creation from EBM perspective, and I believe it's Ocean is doing that pretty well. You go where the movement is already, where the action is. I think it makes sense, of course, and we're a bit biased in terms of how we look at how innovation is stimulated. But yes, it helps to go to the places such as Atlampol that have a very strong blue economy cluster, and that not only means that they cover the whole value chain, so you have access to the researchers and as well the ability to connect the research from different disciplinaries to talk about one issue, and they might have different solutions that come together or that emerge from that. Also to sensitize students about the need to and the possibilities and the options how you can. Again, from our perspective, from the innovation ecosystem perspective, all the actors of the quadruple helix are present there. So that means you automatically as well connect with the corporates, you will connect with the investors, you will connect with the marketing as well, with civil society, of course. Make your life easy, do it at the places where where there is already action. It will save you a lot of energy, and I think energy is what you definitely need in this challenge.
That's the thing, you know, you spoke about absorption capacity. We have other challenges also related with absorption capacity. So, you know, we're just at the moment a small movement trying to have some impact. But I think this is all very positive. And, you know, we're obviously coming from ocean literacy, but we're not just about ocean, because ocean, part of our logic is that we're actually on planet ocean, not planet Earth, almost. When you think about the hydrosphere, so there's nobody who can say that their life is not touched by the ocean. But anyway, Sarah, I think there is a question from the audience. Would you like to bring it up?
Yes. So the question is for both of you. For sure, you must have different insights or not. But the question is from Maria Lopez, and she asked, could you share your thoughts on how open it's the business sector is to integrating professionals like marine biologists or experts in marine environment or in marine resources, and what steps are being taken to support and include ocean professionals in companies?
I can go first if you want. I will be very short, I think. Well, in my case, what the business can do to include this professional, in my case, it's easy to reply. It's to open a startup that work in that sector.